Hi, guys. Welcome to our Thursday evening, or if you're in Australia, it's morning, uh, live Q&A. Today, we're going to be talking about navigating the crypto markets, navigating the market cycles, that is. And and I'm David Anderson, and this is George from Uptrade. We're going to be kind of tag teaming this live. So he's got his perspective, I have mine. So let's just dive right in. The first thing I want to talk about is just introducing our backgrounds and our perspectives on market cycles. My market background is I started buying Bitcoin heavily in 2014. And one of and I guess I can introduce myself by talking about some of the mistakes that I've made along the way. One of the mistakes that I made was that I got heavily involved in Huobi Exchange. I was enticed by the fact that they were offering free trades. And I'm like, and I was a kid in a candy store, right? I didn't know that much about technical analysis at the time. I was just kind of flying by the seat of my pants. But and I was kind of pessimistic about Bitcoin. I didn't think it was going to go up and up and up. But I was enjoying the volatility, right? So I would buy at 200 and I would sell at 800, and then it would drop down to 200 again. I would buy at 200. But one of the problems with this approach, and I'll share my screen briefly, is that I kind of missed out because um, so I started buying. So this was the first markets, the first bull run. It started in, I guess it started at the beginning of Bitcoin, but it really ended right around Mount Gox. And I started buying heavily right in this trough period right in here. But the problem that I experienced was that I was sitting on the sidelines and I missed out on this huge, it would have been 100x opportunity for me if I would have bought it 200 because it went up to $20,000. Again, I was buying at 200, selling at 800, and rinse and repeat. The other big mistake that I made was that um, let me stop screen sharing. The other big mistake that I made was being too optimistic. Around in 2021, during the last bull cycle, the last bull run that we were in, I thought there was going to be a huge bull run around the Coinbase IPO. And it was around the same time, like 3 days later, Gary Gensler uh, you know, was assumed the chairmanship at the Securities and Exchange Commission. He had taught a course previously at MIT on blockchain. So I thought that he was going to really be pro crypto. And so I just thought that 2021 was going to be this gangbuster year. I also bought into the fact that perhaps this stock to flow model where, this prediction that Bitcoin was going to go up to 130,000, that was true. It turned out to be false. Bitcoin, it went from 68,000 down to 34,000 in 2021. But of course, toward the end of the year, it went back up to 68,000 or something. But anyway, it wasn't the gangbuster year that I thought it was going to be. So that's kind of my background and my introduction to cycles. George, I'll turn it over to you.
Yeah, absolutely. That sounds like an awesome story. I can't say that I was as early as David was in the crypto space. So I first joined in 2017. This is around about the time when Ethereum really came to light, and Ethereum was one of my first purchases. I think it was around in Australian dollars around 400 at the time. I guess from a personal perspective, I first got into, I guess, crypto and the blockchain industry because naturally I'm a contrarian at heart, and I think that this is a great industry to give back power to the people and to really help people have control over their finances, their investment choices, and also give a little bit of power back from the authorities and the governments to the people. And it's a more of a natural balance. That was how I first sort of came across it, and since then I saw amazing innovations in Australia. For an example, a lot of the Australian big four banks used to charge $2.50 for an ATM withdrawal to withdraw your money from your bank. And I thought, well, this doesn't seem really fair. I mean, it's our money. I guess there are, of course, payment processing fees and transaction fees, but I think we're a little bit more modern to be charged transaction fees at this point in time. And then, to my surprise, a few years later, we had Ripple XRP, and then we had the Pay ID technology implemented in most of the banks, and they've now sort of withdrawn those fees. So it's been an amazing journey of seeing how blockchain can actually help people in our everyday lives. And now it's become a whole moving beast since 2017, where we have DeFi applications. Now we're talking about Bitcoin DeFi. So I guess for me, I've been through now this has been my third cycle coming into 2024 and 2025 this time around, and it's been a real interesting journey. I guess my background, I'm in the brokerage team at Uptrade, and we're a very boutique digital asset brokerage based in Melbourne, Australia, but we also have clients, in Canada and North America, New Zealand, in Europe, Australia. So we're really aiming to be, I guess, a professional services hub to help people with their crypto investment journey. And so, having my experience 7 years in the space, I'm really trying to help my clients and in the best way that I can, so that they can extrapolate and extract as much from an opportunity as possible. And as part of that, it's also very important to understand, the market cycles, which is sort of relevant to that today, in terms of when would be potentially exiting from our positions coming into sort of potentially next year. And I guess that will form the basis of this conversation with David. So, David, back to you.
Okay, so I want to talk briefly about what are the market cycles that I see, and particularly the particularly the bull run cycles. And the first one, I think, was when basically up until the Mt. Gox hack, which occurred in April of 2014. That the bull run was really up until that point, and then April we saw a crash after the Mt. Gox hack. Bitcoin went basically crashed and went down to $200 or less. But anyway, the second market cycle was the one that I mentioned earlier, the 2017 one. And I think that, as best as I can determine, it lasted about almost 3 years. Like, here's 665 days from the low to the high back then. And then the next big bull market started in 2020, and it lasted until the end of 2021. It lasted almost 2 years, probably. Well, did I miss one? Let's see. So the first one was ended in 2014. The second one ended in 2017. The third one ended in 2021, and now we're in the fourth big major bull run. And so again, at this time in 2017, I was kind of pessimistic. In 2021, I was optimistic. Hopefully this time I'll be able to get it right, and be able to call the tops and the bottoms a little better than I have. And in terms of the factors that I think that influence this current bull cycle and other bull cycles, first of all, I think that the spot Bitcoin ETF in this cycle is going to be a huge factor that's going to drive the price. And as we see, it already has driven the price up. I think that the Federal Reserve keeping bond prices high and the US dollar strong is going to be kind of a hindrance to Bitcoin and cryptocurrency really taking off. So when the Federal Reserve starts dropping interest rates, I think that's when we're going to start seeing a really strong bull market this cycle. And also the SEC, keep an eye on the SEC. They've really given a boost to Bitcoin in January 2024 by approving the Bitcoin spot ETF. But are they going to approve the Ethereum spot ETF? Doesn't look likely. I think that Bitcoin, the Ethereum spot ETF is probably not going to be approved at the end of this month. I think the pundits say that there's like a 25% chance. So these are some of the things that I'm looking for. But we're definitely in a bull run right now. On the weekly chart, we've been in a bull run since basically, well, on the daily chart, it's the weekly chart. It's been since April of 2023 that we've been in a bull run. So anyway, over to you, George.
Yeah, so that's fantastic analysis, and looking back at, and historically is really important to see what will potentially happen in the future. Although it isn't guaranteed, history rhymes, and there's a lot of similarities in the market cycles. So I guess from from my from my understanding of market cycles in crypto, typically we say it's a 4-year cycle. From my experience, and that it really does follow, and it's sequenced around the halving. And I think the halving is a massive catalyst for any sort of bull run to kick in. And now we've seen that the new issuance of Bitcoin supply is effectively halved as of a few days ago, and it's become a rarer asset than actual gold in terms of the amount of inflation in circulation that will be from this point onwards. So the block rewards for miners has dropped from, I think, 6.25 to 3.125, and um, every 4 years it just becomes rarer and rarer to own. And over the last 16 years of its life thereabouts, it's been going up approximately 200% on average, year on year. So I think David was really playing the market cycles back in 2014, but I was a firm believer in hodling that as a store of value, seeing the data and analysis of that. So my sort of personal preference is long-term positions or swing trades over a longer period. Of course, I have my core Bitcoin and Ethereum holdings, and my altcoin positions are just an interesting play. So yeah, so from a macro point of view, David's actually very correct. It's very hindered around macroeconomics, especially at this point in time where we have skyrocket inflation that's quite stubborn and not really wanting to go away. We have geopolitical tensions at the moment, and so we're really wanting to see, will this 4-year cycle or this 4-year halving period play true? And so we really need to see what happens beyond this year. So going into 2025 to see how the market reacts and how it gets priced in. And that's how it follows. It follows the liquidity cycle as well. So it follows the amount of money printing that the Federal Reserve is putting out, and there'll be a lot of that, especially in the election year this year, to fund the war. They send a lot. The U.S. Fed is sending a lot of money to other parts of the world at the moment to obviously fund the war as part of the political tension. So I think a big theme could potentially be that people are going to flee towards hard assets, anything to do with potentially property, gold, silver, Bitcoin being a commodity. It's still determined whether we're risk on or risk off asset. The market will determine that, and I keep telling everyone that. But really, for me, it's the biggest indicator of market cycles. Yeah, it comes down to the liquidity cycle, i.e., money printing, and also the halving. And from another point of view, it's technical analysis, which is what David was showing to you a moment ago. And of course, every single year, it's more and more rarer. It becomes harder to produce, and so it's one of the most fantastic assets in the world, in my perspective. And so, yeah, I guess that's a little bit about my understanding of market cycles. I'm not sure that everyone seems to think that there's diminishing returns over time. Each cycle has lesser of an expansion phase. We had a blow off top in 2017, 2018. We had a double top in 2021. So the question is that, are we going to see a massive supply shock this time around? And are we going to have a blow off top going into 2025? That is the big question everyone's asking. So let's just see. I mean, time will tell. We can only speculate. This is a crazy part of the time of the world. We just came out of COVID. There's a lot of turmoil in the world with the wars happening, and as you said, the Federal Reserve has got a pretty tough job of defending the dollar, David. So let's sort of see over time how that pans out. But back to you.
Sure. So I'm not sure where to begin on this next phase. I think what we want to talk about next is the effectiveness of predictive models. That is, what is really predictive. And I suppose I'll start off by talking about my Bitfolio macro indicator. Let me share my screen. So this is something that I've put together that analyzes four different things. Now, there was a 2021 study, and they looked at 22 potential indicators that really affect the Bitcoin price. So this is focused mainly on Bitcoin, but they determined, and this is on my blog, and there's a link to this article where I pull this from. But basically, they look at the S&P 500, the Michigan Consumer Confidence Index. So these are the two kind of macro indicators. Then they look at the Bitcoin supply cycle and also the sentiment for Bitcoin. And this is the sentiment is captured by the Google Trend Score. And so this is the Bitfolio macro indicator, and as you can see, it's dropped to 32 is kind of the low. There's a spreadsheet that I'm giving away to my members, and that is that basically it shows you how this is calculated. But currently we have a score of 51. And really, so we're kind of at the beginning in terms of this macro indicator at the beginning of perhaps the bull market. One of the things that I kind of failed to emphasize in my last comments was that I think that each cycle lasted about 3 years. As best I can determine, we're only like 12, 14 months into the current bull run. And so we've got at least another year or year and a half to go. So especially if you look on the weekly chart and so forth, this bull run's going to last at least another year and a half, or maybe, conservatively a year, but at least another year, probably a year and a half. And we may not even see the drawdowns that we've seen in the past. But the other thing that I look at, and I kind of do technical analysis much better at it now than I used to be. This is the WAD, this chart. It's a Williams accumulation distribution. And the weekly chart, you see, we've been in this uptrend for quite a while. On the daily chart, though, we've entered this downtrend bear market. So we're a bear on the daily, but we're a bull on the weekly. So that's kind of a precarious situation. The other thing I want to mention is that the stock to flow model, I used to be a real believer in it. I don't think that the halving event is that significant anymore. I mean, we're talking about 350 Bitcoins per day less being produced. I don't know what that is, but 350 times 60,000 is not that significant. So I think what's more significant is the ETF inflows, the Bitcoin ETF inflows, much more significant than the stock to flow model. The other thing is that the stock to flow model, for those who are familiar with it, Plan B introduced it several years ago, and he was predicting $130,000 Bitcoin back in 2021. The end of the year, it was going to be $130,000. That model has been invalidated. And I asked him, is he going to invalidate his model and stop talking about it? And he's still talking about it. I mean, but what he's done is he's totally kind of redone the chart so it fits better now. It fits. Anyway, it's total bullshit as far as I'm concerned. Back over to you, George.
Yeah, no, it's an interesting one. Stock to flow model. Everybody's seen that. We got a trader in the office who's been prop trading since 2017. He's quite friends with Willy Woo, one of the top macro economists around Bitcoin. It produces amazing content, and it really is anybody's guess where we're heading. But to David's comments, exactly, we are very early in the early stages of this bull cycle. There are some wild estimates of where the total market cap could get to, which is about anywhere from 8 to 10 trillion in market capitalization this cycle. I think the biggest contributor of this is as you say, the ETS. I mean, we've been talking about institutions coming to crypto since 2017. Every damn year we were saying, when are they coming? When are they coming? And they're finally here. And BlackRock just announced, I think recently, that a lot of Sovereign wealth funds, pension funds, and endowments are looking to soon trade spot Bitcoin ETFs. So now we have an ETF where retail can purchase, but also a lot of institutions are going to be purchasing this ETF directly. And to David's comment, it is only about 450 Bitcoin are being mined per day. It's minimal in terms of the available supply. And now you have all this institutional funds buying, and Australia announced they're also launching ETFs. We had Hong Kong ETFs launch a couple of days ago, which was a bit of an overstatement in terms of the volume that they were hoping to get. I think they were hoping to get about 300 million in volume in the first day, and it ended up being like 12 million, which is unfortunate. But I looked at the market segments between how large the US ETFs are versus Hong Kong, and it was a massive difference in the sizing. So that's to no surprise there. I guess predictive analysis is very hard to get right, and it's something that you're going to take it with a grain of salt. But I think really importantly is knowing what factors can impact these market cycles. And I think that in my opinion, we're in a commodities super cycle. I see commodities really shining in the next coming decade. This decade that we're currently in. Main reason for it is that if you look at gold on a longer time frame, and it's just broken out of this huge cup and handle over the last 12 years, and it really is surging in terms of its strength. So it's kind of paving the way for this commodities run, and leading up to, I guess, the election time, and there's going to be a lot of uncertainty in the world. I mean, inflation's still stubborn, so we need to kind of see, well, how does Bitcoin being digital gold fare in a world where the commodities are really sort of surging through? And so I guess that's to be determined. This is the market's going to, people like David and I are going to be determining how Bitcoin fares in this climate. Now, I'm leaning and hedging towards the more bullish side. I think that it will really shine as a store of value and an inflation hedge in this current period. And I think that is going to be a really big impact on the price. Is that how does the market price in this asset class? But now it's no longer just a retail game. We have institutions involved, and this is the biggest indicator. I mean, from a risk perspective, I'm trying to think of what are some of the risks, David, that could potentially sway Bitcoin off its path. I mean, potentially an escalation of the war. But then again, people would flee to hard assets. So it kind of brings me back to that thesis. I mean, volatility, of course, we just saw a 20% correction. I mean, that's shaken a lot of people. A lot of my clients are actually kind of concerned about this. This dip in the recent weeks. It's like Bitcoin has dropped 20%. Altcoins were down 40 to 50%. And people are really getting shaken out, and they're saying, what's happening? I'm saying, well, this is actually part of the normal cycle. Is that if you look back in history, you'll see post-halving, there's always been a specific correction, and we've been going up only for the past 6 to 8 months. So a little correction is not to be, too fearful of it. However, there's a lot of fear in the markets, and it's exactly what we need to start a new uptrend. Is we need people to be fearful. We need people to be frustrated, angry, depressed, stressed, all the above with their portfolios before we can see potentially a move up. I mean, money's not made in positive sentiment. It's made, when you are buying, when things are down. And I guess also, if you look at it from a futures perspective, all the indicators in the futures market have been reset too, like open interest, funding rates, and there's a lot of order books and buying here that we've seen at 56,000. So the question is, where to from here? So I guess risks is to be taken with a grain of salt. But do you have any other idea, David, on what could throw Bitcoin off its path potentially and stop this bull run in its entirety?
Well, so I think the ETFs are hugely monumental, as you mentioned. I think it opens it up to retail investors. It's self-custody is kind of a pain in the ass, as we discussed in our last chat. So ETFs kind of free that up. I mean, retail investors can more easily buy. I think that Robinhood and PayPal and some of the others were allowing you to buy Bitcoin as kind of a retail investor. So that started a while back, but the ETFs just make it better. I think make it more easy. I think that one of the things that and also an ETF does is it opens it up to these investment advisors. And most of those guys are just going to say, oh, 1% of your portfolio as a hedge, kind of, yeah, let's just add Bitcoin or Ethereum or whatever to, to your portfolio. So I think the investment advisors are going to be huge going forward. And of course, institutional investors, maybe even governments, sovereign wealth funds, that sort of thing. But I'm not sure about that. But I'm much more confident in the retail investors and the investment advisors. One of the things that's going to throw a kink in the that could, it's really difficult to understand why the SEC took, until 2024 to approve a Bitcoin spot ETF. I mean, it was really ridiculous that the SEC is anti-crypto, and who would have guessed? And this is one of the things that kind of threw me off back in 2021. I thought, oh wow, the U.S. is going to get behind crypto, and it has been the exact opposite. So will they continue this anti-crypto stance? Gary Gensler has proven himself to be like enemy number one. So they're probably going to deny the Ethereum spot ETF and kind of delay things. I mean, the longer that they throw roadblocks, the more difficult it's going to be. So, this anti-crypto stance by the U.S. government is ridiculous. And I've already mentioned the restrictive money supply of the Federal Reserve. I think that's going to play a role. And so I think right now we need to have like a 2-year time horizon. I think that if if you're buying crypto, especially the mega cap cryptos, Bitcoin, Ethereum, BNB coin, Solana, those are the top 5. I think that you're going to be, as long as you have like a 2-year time horizon, I think you're going to be just fine. Go ahead, George. So one of the things I think we need to start wrapping up. What are your takeaways and final thoughts? What do you want to leave us with?
Yeah, absolutely. I think the biggest takeaway is the opportunity at hand, especially at this current point of time in time. And I guess it's not really financial advice, and you should always never invest more than you can afford to lose. That's really important. But the opportunity right now for a lot of large cap altcoins is huge. We have some blue chip projects that are down 40-50%, which is unheard of. I mean, this could be the best buying opportunity since 2023 last year, where, even since FTX collapsed. I mean, Solana is down 47% or thereabouts. That's unheard of. So I guess what I wanted to leave everyone with is, yes, there's a lot of fear, but when you sort of figure out what Bitcoin was created to be, we could potentially see prices as high as 150,000 US dollars to 200,000 US dollars. That's potentially on the cards here. And I don't like to give price predictions, but when you factor in everything we've discussed today, it kind of with the market cycles, the new consumer interest and institutional interest, this is what leads me to believe that this is potentially on the cards. And I don't want to sound crazy, but this is the opportunity at hand that you have in front of us. So that's I guess from a prediction point of view, kind of where everyone's sort of eyeing and targeting. Could we go higher? Yes, but the idea is to capture most of the meat in the middle in the move and potentially dollar cost out your positions as we head to that cycle high or wherever it lands. It's a magical number. There's a funny saying that I'll leave everyone with. It's they say there's about 236,000 miles to the moon. And so everyone's predicting that will be the Bitcoin top at 206,000 US dollars. So, yeah, I guess that's my sort of closing remarks. David, did you have anything you wanted to sort of wrap up with?
Sure. Like as I said earlier, I think we're at least a year. I think there's at least another year of the bull market left, probably more like 18 months. And who knows if we're going to see a 70% down like we have in previous bull runs. It might not be that. I mean, it might just kind of, stay high for a while. Who knows? But I think we're going to see at least a doubling of Bitcoin, at least 120,000. Probably more like 200 or 300, something like that. But it's hard to say. I mean, it all depends upon a lot of these macro factors. And it's really difficult to predict. I'm not a registered financial advisor, so I don't give financial advice. But but I do anticipate at least a doubling, tripling from here. So if it's, at least probably 180, I think I established a year-end projection of 120, like at the beginning of the year. But I think that we have more than a year of bull market left. So I think we're gonna blow them away. We're gonna blow that 120 away in 18 months. I think it's gonna continue to really, really go up and up for the next 18 months. So I think that people should be fully invested. I mean, if you're a long-term investor, 2 years, 3 years, I think you should, be loading up on especially the top, the big macros, the Ethereums, the Bitcoins, the Solanas, the BNB coin, these big macro, these big cap coins. I think you should be loading up. I think you should be fully invested. So that's my takeaway. Anything,
Fantastic.
anything else you want to add?
No, that was exactly the summary that I would get to. Is this is a real opportunity to make a difference in people's lives, and you can do it with a really appropriate risk profile according to each individual. And so it's just like BlackRock sending their financial advisors or their brokers to potentially push the Bitcoin ETF and a percentage allocation of their portfolio into this asset class. People shouldn't shy away from that. This is the pioneer of financial advisors that they're giving advice for. So if they're sort of now pushing it because they're making fees out of this, then it kind of tells you that we're in the right areas. And it was funny. I mean, back in when we first started, they were saying Bitcoin's a shiny rock, it's a scam, and now that they can make fees off the ETF, they're saying, oh, it's the most greatest thing since white bread.
Well, thanks so much for joining me, George, and let's do it again sometime soon.
Absolutely, it's a pleasure, David. This was fantastic.
All right, take care.